Hey everyone, it is Jay Soloff here with Investors Alley, and we are looking at our options trade of the week. So I'm here in marketchameleon.com looking at their options block trade screener, and after a crazy week like we had this past week with a lot of volatility in the market, I like to look and see what's going on with volatility trading, particularly with the most popular ETF/ETN out there, which is VXX, the iPath S&P 500 short-term VIX Futures ETN, and basically it tracks the first two futures month of VIX. So in other words, it tracks short-term volatility, tends to go up when people are scared, when the market's going down, tends to go down when things are more calm. So generally could be a pretty good indicator of what's going on in the market. So looking at VXX and looking at some of the bigger trades, I have this sorted by quantity. You can see there's some, fair amount of action, some 3,500 lots and on down. So looking at this first one here, it's a spread of VXX, happened right at the end of the day. It looks like someone rolled some options maybe from the 9th to the 23rd of August. So the 9th is today, so it expired. Looks like someone sold puts at the 26 strike. The stock ended up at 26.22. So if you were looking at VXX beforehand, you would have seen that it was down around as low as about 22 in that range before shooting up all the way to about 30. So I'm not sure when this trade was put on, but it was definitely closed right near the border here of 26.22. The puts were sold, and they were closed out for 4 cents. So someone made money on that, and they rolled it out 2 weeks to the 26 puts, where they ended up selling the options for $1.51. So what is happening here is someone is thinking most likely that there's a floor on how far VXX can fall. They assume that these volatility conditions will remain, robust enough for these puts to make money, right? So because we're at 26.22 and the 26 were sold, that's not a lot of downside cushion. However, they were sold for $1.50, so that's protected all the way down to about 24.50. Anything above that, and they can collect this amount. They want to do what they did here, which was close it for under 5 cents and take in all that premium. So interesting trade here with volatility coming down. Obviously they think it's going to stay up as far as what we know. Now there may be some other portions of this trade that we don't know about. This is a hedge for something else, but just looking at this trade in a vacuum, this person doesn't want the VXX to go below 26, and they want to be able to collect that entire 151. But again, they have all the way down to 24.50 for break even. And just looking at this a little bit closer here and pulling up the chart, you can see once the chart comes up here that here's 6 months. We were down all the way down here to in the 21, 22 range, shot all the way up to about 30, climbed all the way back down, and then came back up. So it came back up just in time for them to get out of those 26 puts. It would have to go down here to about this level here, where my arrow is, to lose money in the next 2 weeks. So they're thinking that we'll stay elevated, at least in this range over the next 2 weeks till the 23rd of August. So interesting trade, suggesting maybe there's some more volatility ahead, or at least volatility isn't necessarily going to go away over the next 2 weeks. Now, if you're interested in learning more about volatility and maybe some even strategies for trading VXX, I talk a lot about that in my video courses, Option Trading Mastery. I have a particular video that's just a course on trading ETNs and volatility, particularly VXX. So you can click on that link to Option Trading Mastery and take a look at that if you are interested.